So the rates plus the risk, the rating system I said is a little different. We talked about with the National Flood Insurance Program, on the term, flood history, but it'll go back 50 years, they'll go back 20 years, they'll go back 5 years. It depends on the risk. They're looking at frequency of floods, the type of floods, proximity to water. One big thing they look at too is construction and foundation. I'll give you an example, one that we get a denial on almost every day from a private company, and that's if it's in this 20-year floodplain you can see right here. What they call a 20-year floodplain is what they're talking about is just the frequency of flooding that happens. And if it's in that zone and it has a basement, then we know this particular carrier is going to deny it, and they do almost every time. So that's kind of an example of some of the private companies, how they look at risks. I'd say 80% of private companies, if you've ever had a flood loss, they may not do a policy at all, which can be challenging as an agent because a customer comes to you and says, I don't know about any flood claims, but what if someone had one in 1980 we don't know about? And then we put on the application it's never had flood loss. And then they try to come from misrepresentation. It can be challenging. And so that's why we have to do as good of a job as we can to figure out if there have been any flood losses, to protect ourselves and to protect the customer. So that's how the kind of flood rates and how they do their risk is looked at. One other thing they're looking at too is compared to the National Flood Insurance Program, most private companies are not charging you more because you're using it as a secondary property. They don't have that $250 surcharge. So that's a big difference on private. Now, one of the important things to know is with both of these, they're all 12-month rates. Now, like I mentioned, some of the private companies are doing quarterly billing now, which is great, but the rate's always going to be guaranteed for 12 months. Admitted and non-admitted, this probably is my favorite topic out of the whole course, because one thing is that North Carolina is actually the front runner when it comes to changes on flood. And that is because some private companies that recently have launched admitted flood products in the state of North Carolina. They started them in Florida, New Jersey, and one particular carrier recently launched in North Carolina as admitted. And so a big difference between admitted and non-admitted is really, think about this, your traditional home carrier in the state compared to a excess and surplus. They don't have to follow certain state laws because they're set up different, guidelines, non-renewals or renewals, or a situation now, we haven't seen it where this has happened this way, but technically they could pull out without paying a claim because they're not admitted. So that's the difference, is admitted generally can give more protection. Rates could be a lot higher or your options could be limited, but at the end of the day, admitted is always going to give you really the most protection. Well, is the National Flood Insurance Program admitted or not admitted? And I said, it's actually neither. It's through the federal government, so it really has nothing to do with the state. But when it comes to admitted and non-admitted, most of your private carriers are still not admitted, but admitted is making a big push.